today in the stock market. The Sensex gained 130 points with the Nifty steady at 23,600. Top gainers included Eicher Motors, HCL Tech, and HDFC Bank, while Power Grid and BPCL were among the laggards. 197 Communications rose 3% after being included in F&O trading, and Worth Investment shares traded ex-bonus. Earnings are in focus today. Companies like Hero MotoCorp, Glenmark Pharma, and First Cree will report their Q2 results. Hero MotoCorp is expected to post strong growth, with an anticipated 9% increase in profit driven by rising exports and volume. Hero MotoCorp, the world's largest two-wheeler maker, is set to announce its Q2 FY25 results today, November 14th, with a total volume of 15.2 lakh units this quarter, up from 14.1 lakh last year. The company expects strong growth, boosted by rising exports and increased sales. Revenue is forecasted to rise by 8% to around 10,223 crore. Net profit is anticipated to jump 9% to 1,147 crore, as per analyst estimates. Surprises in these figures could lead to significant stock movement. Stay tuned for updates.
Hero MotoCorp Q2 preview. Volume uptick. Rich mix may help net profit rise by 9. Hero's total volumes for the quarter stood at 15.2 lakh units, higher than the 14.1 lakh units sold in the same quarter of the previous fiscal year. Hero MotoCorp, the world's largest two-wheeler manufacturer, is set to release its earnings for the second fiscal quarter of FY25 on November 14th. A sharp rise in exports and robust volume growth is expected to boost the company's sales and profit positively. According to a money control poll of 8 brokerage firms, the Harley-Davidson maker is anticipated to record an 8% year-on-year increase in revenue, reaching Rs 10,223 crore. Net profit is projected to surge 9% to Rs 1,147 crore, up from Rs 1,054 crore in the same quarter of the previous fiscal year. Earnings estimates from analysts polled by Money Control are in a narrow range, indicating that any positive or negative surprises could trigger a sharp reaction in the stock price. Indian markets rebound slightly, but bearish sentiment persists despite a modest rebound on November 14th. India's benchmark indices, Sensex and Nifty, remain under pressure after hitting 5-month lows the previous day. While the Sensex gained 0.05% to 77,730.42 and the Nifty rose 0.06% to 23,573.5, analysts warn that this is likely a temporary pullback. Disappointing September earnings from Indian companies and continued foreign outflows have dampened market sentiment. The frontline indices have now fallen 10% from their September peaks, prompting a shift from the buy-the-dip strategy to sell on the rise. Experts believe the recent decline is a technical correction, but underlying fundamental factors continue to weigh on the market. They anticipate the downward trend to persist in the near term. Key takeaways: rebound. Sensex and Nifty saw a slight increase after hitting 5-month lows.
Torrent Power, a major player in the energy sector, saw its stock price plummet over 4% this morning after reporting weaker than expected earnings for the last quarter. While revenue did increase, net profit took a hit, falling 8.6% year-on-year. This news comes as the broader market is already feeling the pressure. The Nifty 50, India's benchmark index, has dropped over 10% from its September peak, officially entering correction territory. So what's causing this downturn? Well, there are a few key factors at play. Fee exodus. Foreign investors are pulling their money out of India, lured by China's new stimulus package and the prospect of Donald Trump's re-election in the US. Weak earnings. Companies across sectors, especially in consumer goods, are reporting disappointing earnings, adding to investor concerns. Global headwinds, rising US bond yields and a strengthening dollar are putting pressure on emerging markets like India.
The question now is, will Torrent Power's stock decline be a standalone event or a harbinger of further trouble for the Indian market? Let us know your thoughts in the comments below, and don't forget to like and subscribe for more market updates.